All attendees are in listen-only mode.
Okay, please let me know if you can see now my screen. Is a home page of the financial forecast. So we have audio, we have the screen already shared, and I will share my webcam so you can put a face to the one that is talking behind. Thank you, Rodrigo. Gracias, Rodrigo. Okay, now you can see me too. So hello, good evening to everyone. Let's go to start with the webinar. Today we have really 1 hour because there is another webinar coming after. Hello, Flavio Lassa. Are you Italian? If yes, yeah. There is no tone. Okay, you cannot hear well. Everything looks like this okay. Reinhold, so let me know if you can. Okay, now it's okay. Perfect webcam. Okay, everything is good. I have here the chat box open. All okay. Okay, so let's go to start. First, we have first question coming from James. Thank you, James, for the question. He's saying, with interest rates close to zero, what is a good place to park emergency funds or very short-term cash? What are the best high return, low risk cash equivalent ways? It's a very good question, James. I always say in this moment when everything is so turbulent, the best is try to keep the cash. Yeah, where can you put some part of your savings? Always try to go for something that you can store value, like for example gold, that you know that will keep the value in the long term. And we will see the graphic of the gold today. Yeah, so you can have an idea. Stocks now is very risky. ETF is very risky. Everything that is linked to indices at this moment is very, very risky, except that you can go to some kind of alternative managed fund that you know that they can invest with the bear market. Okay, like now. Okay, so let's go to start. Welcome everyone. I'm Matias Menendez from the financialforecast.com. Today, what is the plan for today? I don't know if some of you already joined a webinar before. So we have like a kind of a structure now. So first we will do a brief intro so you know who I am, what we are doing in the financial forecast. Then we'll move quickly to the economic calendar, but we will focus especially on what is happening around all the coronavirus crisis, yeah, because the economy is really, all the economies are slowing down. Then we go to instruments. You can ask the instrument you want. It's okay. We always try to work with these five because it's a representation of forex, indices, crypto, and commodities. Okay, but if you have some specific question, you can drop that question in the chat box. Okay. If you cannot hear me well, just stop it or send me the message here in the chat box so I can say again what I was saying. Yeah, there's no problem for that. And at the end, we will see what is the performance of our artificial intelligence called the Bumblebee. And now it's a very good moment to test it because we have all the crash in February, March, and we will see that most of the investment funds, they drop like 20% average based on Morningstar. And Bumblebee in this case is an alternative way of investing, achieve a 30% in March. Really, really good. So I will show you what is that about. So easy for those that don't know the financial forecast. We're specializes in the development of tools for investors and in education. Okay, because according to Fibonacci return estimation, blah, 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 blah. Okay, Christos, we will come back later. Okay, to that to see what is happening with the crude oil. Okay. Yeah. Okay. A lot of questions. That's very, very nice. What is the probability SPE? Is in a Boolean flag. Okay. So we will go to all those questions. Very nice. Thank you, because I really like when you are contributing to all this. So we develop tools and education, and we give education to people that want to invest. Within these tools, we specialize in artificial intelligence, and we apply those tools into platform MT4. And what is the soul of the financial forecast? How we manage all the forecasting system that we have based on what we have here. We believe financial markets are the representation of economic activity, that's for sure. And we can see what's happening now, especially with the corona crisis. The economy stops, everything goes down. That economic activity is part of, we are seeing that now very well, social interaction. At the moment we stop with that, we have consequences as the one we are seeing now, especially now in this global economy. And there are a lot of feelings involved in this interaction. Okay, and we can see that this too with what is happening in the corona crisis. We have panic, we have hope. All these different kind of emotions will trigger different actions in the investors. This is what we call social mood, and all the tools that we have are based on this, and we decode this fractal behavior of each instrument, and we base everything on this. Okay, so this is the financial forecast. Okay, you already know me, so I will skip that because we only have 1 hour. And let's go to center today in what is the economic calendar, what is important, what is not important this week. This week, we have a key day on Friday. Why? Because we have the NFP, non-farm payrolls, and the unemployment rate in the US. Why? Because these are two key indicators to see if we are entering what could be possibly a crash, and we will see what. When the economy slows down, people start losing their jobs. Small companies, they close. Yeah, it will be like everybody will get out at the beginning, especially the weakest in this economy. How to say it? Scenario. Yes, in this ecosystem. Okay, so we'll have this on Friday, and the expectation already is for the unemployment rate a little higher than before, than the prior one, 3.8, and non-farm payrolls. This will be in a negative area with minus 124. These are the expected. Okay, but we will see really the expected on Friday will match with the reality, because it's like quite a lot of uncertainty. So everything will move around these two key elements around this week. We'll have, as you already know, the ADP and non-farm employment change. That is like the preliminary. We will have like a kind of clue of what could happen with the non-farm payrolls. There is not always a positive correlation, but something there can happen. We can get something from this information. GDP was today from the UK. I think it was aligned with the expectations. And CPI was today. I didn't check it, but were not really strong movements in the market, so everything should be aligned with this. So we can review that later. And what is important to know at this moment, why we call this webinar special corona crisis, because we need to understand how what is the part of corona crisis, of coronavirus within this crisis. Okay, so the first one we have this Friday, the unemployment rate. And if we see here, the unemployment rate always behave in a negative correlation with the index Dow Jones all the time. Up, down, up, down, up, down. If we go to 2008, this was the crisis of the 2008, and we can see how the unemployment rate really skyrocketed. Yes, we can expect something similar really if this declare as crisis. Okay, something to pay attention and to keep in mind here is that in this case in 2008, the Dow Jones was first and the unemployment was later. Okay, Sorry, it's the opposite. The unemployment was first and the Dow Jones came later. Okay, and then we have now the Dow Jones going down strongly. Yeah, it's leading at this moment, so we need to wait the reaction in the unemployment. Pending home sales, sorry, I'm reading a question. They come much better than expected. What do you make of by now with the pending home sales? There is still some liquidity. There are credits still moving around. The problem is what we will see in the next slide is when this can really explode. Okay, we will see that in next slide. So why is important now the unemployment rate? Because we should be expecting the unemployment increase to align with the drop in the Dow Jones. And this is like the first confirmation that we will have that we are into a crisis. Kingsley, yes, no problem. How can I get training from you personally? Just send me an email to info@thefinancialforecast.com and I will contact you. Yes, regarding this. There's no problem. info@thefinancialforecast.com. It's the last slide I will show you. And for all of you that want to see the webinar again, tomorrow we will place in the blog in our website. Okay, so you can review and recall everything. Thank you, Kingsley, for the interest. Okay, so we have this the unemployment rate, first indicator. Second indicator we have is the GDP, of course. Are we in a recession at this moment? No, but we can see that the GDP is downtrending. Okay, this is quite big, sorry. It's downtrending. We are not in a negative area, so we cannot call this yet a recession. Okay, but yes, the GDP, the growth is decreasing. And what could happen now with this is a strong hit coming from Corona crisis that the growth starts just dropping. Okay, important to see this to start talking about a recession. We are not in a recession now, or the US is not in a recession. Yes, info at no, I will. Sorry, I will show this to Kingsley because he's asking. Okay, Kingsley is this one, info@thefinancialforecast.com. Yeah, info@thefinancialforecast.com. Yep. Okay, good. So we come back here. So we are not in a recession. The GDP is downtrending. You welcome, Kingsley. And we have there another key element that will be very important to define what is the scenario that we are living at this moment. Any question from this? No? Okay, good. Did you hear about the yield curve? We are now, or we are not in a recession? No. We still are not in a recession. Is Martin? No, we are not in a recession at this moment. For being in a recession, we need to be in a negative growth. Yes, your GDP should be negative. At this moment, it's not negative, and these negative numbers need to stay for certain period of time. Yes, if not, it's not called a recession. Yeah. But everything looks like we are baking a very nice recession at this moment for all the monetary policy we applied in the prior 10 years. Yes, so we did everything, or the central bank did everything to be in a position of a recession at this moment with all this that coronavirus is triggering, yes, at this moment. So the yield curve is not anymore inverse. So maybe you heard about this as an indicator, the yield curve. It was in a negative point last year. What does it mean? So the yield curve, if we see, we reach negative points always prior to recessions. Yeah, that's why it's quite a trustworthy indicator at this moment. And we have the same last year. So we are not in a recession at this moment, but everything is pointing to that. Yes, we are not anymore in the negative area with this yield curve. This comparing 10 years versus 3 months. Okay, how much interest we pay. Now the curve is okay, but based on this, recessions are very, very close to this. Okay, to this fact. So when a recession finally comes, Maria is asking, we can expect prices falling down again, or do you think that market already discounted? No, with a recession, everything will just go down. Yes, because what will happen, and that's why in a recession, the strongest investment or one of the best investment that you can do is just keep your cash. Because everybody, the people won't have enough cash, companies won't have enough cash, so everybody will try to keep this cash. Okay, the consumption will decrease, will drop. So I'm from Argentina. I experienced already quite 2 recessions, one very strong one, and all what is consumption stops drastically, and people just try to survive. So that's what really pushed the market down. Yeah. So you need to expect that everything will go down. Yeah, prices of shares, indices, real estates, everything will drop. In some cases more, in some cases less, depending on the country, how strong is the country, how this country can face the crisis that is coming, yes or not. Okay, so we have a third indicator about a potential crisis. You're welcome, Maria. It's funny when there is a future recession and everything plummets in the market, yen, dollar, and gold are safe products. Okay, not the currency, the yen dollar. We will check what is the correlation with it. But yes, the gold is like a safe haven. It's called a safe haven, yeah, because gold is gold. And what is happening? The behavior of investors is just taking the money from those investments that are not working and putting into safe haven. It's like, for example, the gold that you know that it will keep the value, and in this case, the value will grow. Okay, so gold is always a safe option. Okay, sorry, I have another question. So that means that we make a lot of money shorting everything. Yes, now is the moment of shorts. The long-term trends will become bearish. Yes, now this is the beginning, and we need to see the confirmation. We'll see a graphic now with the Dow Jones. How long could last this potential crisis? Okay, so that will give you an answer for how long the market will remain bearish. Okay. And what is happening with the coronavirus? Why coronavirus is so important? Is really the guilty of what is happening now? No, coronavirus is not the guilty. And you have this graphic in the blog or in our website. All these that are epidemics around the history in the Dow Jones. So what we can see is most of them are happening at the beginning or end of bearish market or beginning of bullish market. 99.9% of the time in all these epidemics. What's happening now? The coronavirus started at the beginning of what could be a bearish market. Is really the coronavirus the one that is causing this? No. Yeah, it's just a trigger because history is telling us epidemics occurs at the end of bearish markets mainly. Why? Because everything is set to get this kind of diseases. Yes, because the growth is not the same, the health is not the same, the purchasing power is not the same. Okay? Yeah, so sure, I will maximize the PowerPoint. Sorry. Okay. So that means that, yeah, we're now at this moment, the coronavirus is triggering something very, very important that is a consequence of all the monetary policy we had in the last 10 years. So we have quantitative easings, we have low interest rates, a lot of printed money, yes, just to keep the economy and the growth aligned with expectations. And what is happening here, that the debt in the US in the last 10 years only increased, and the blue line is a reflection of all the different kind of bonds that we have in the market, just increase. And if we see the outstanding bonds, they are only increasing. So what is happening if the economy just stops? As easy as our internal economy at home. What happens if some of you lose your job? Probably you need to pay a lot of credit because you have the mortgage, you have probably your car, you have maybe vacation, the university of your kids, whatever. Yes, all the economy now is based on credits. At the moment you lose your income, you will struggle trying to pay those credits, and probably you will enter in default in some of them. So that is what is happening now with the American economy, and that is why Trump wants to activate everything as soon as they can to avoid this, to avoid really a default in this high and increasing debt. And if this happens, really, this will be the bursting of this debt bubble that everybody is talking at this moment about this. Okay, so the debt really is the one that will cause the next recession, the next crisis of this new this 21st century. Okay, the debt, not the coronavirus. Yeah, this is important. The coronavirus is just only the trigger because it's stopping all the economy. If you have a strong economy, this shouldn't be ending in a recession or in a big crisis. The debt, yes, because everybody will enter in a default. Yeah, very important, this concept. Okay, so let's go to move to the analysis, to the different instruments. Do you have any question about this? Is clear the idea why we are landing at this moment with this big drop? It's corona crisis plus this debt bubble, and there's a big panic over the last few days. Are back in the mood? No, this in the end is a correction. This is a nice question, James. So it's very important. So when we can define a bullish market or a bear market, and probably if you have the same. For example, if we see the picture of the Dow Jones at this moment, if we see maybe the picture in intraday, or maybe let's go to show that, so we can just explain better that concept. Okay, so let me go to the S&P. So if we go intraday and we see this graphic, let's go to 30 minutes, and I ask you, okay, what is the trend at this moment in the S&P? Everybody will say, okay, this trend is bullish. Yeah, and you see the graphic is correct. Higher highs, higher lows. Yeah. We move to the daily. What is the trend here? Bullish or bearish? I think most of you will say, no, it's bearish. Yeah, why? Because of this drop. Yeah, it's perfectly fine. If we go here, what is the trend? Bullish or bearish? I will say probably it's bullish because we have higher highs, higher lows, and what we are seeing now is a correction. So it's very important. So the trend depends on the time frame that you are looking at this moment. Yes, and it's subjective. Yeah, the trend mainly will depend of the person that you are asking. Yeah, so that's why it's important to don't stick to, there is no one trend. You have multiple trends at the same time, running at the same time. Okay, we saw that intraday 30 minutes was bullish, then we move to bearish, and now we move to bullish. Yeah. So let's go to weekly or daily. In daily is when we can see, okay, now the trend is bearish. What is happening exactly? We move to the next time frame, to the monthly, to the long term, and we can see here, okay, yes, probably we are correcting at least this cycle. The cycle started in at the end of the crisis of 2008. Yes, that is the first step. That is the first step we need to see if the market behaves accordingly to the correction to this movement. Okay. So if I'm telling you if I come here to the 1 hour to the daily graphic and you ask me, okay, no, the trend now is bearish and we are correcting probably a very long term cycle. If we talk about time, so we have this in our blog. How long could last this potential crisis? So Maria is asking when the bubble will burst. Anytime soon. Yeah, if we see that this situation extends another month, 2 months, yeah, then we can start just talking about. That's why it's important to see the unemployment rate. Yeah, the moment the unemployment grows, that means that people are losing their income. Companies are not growing at the pace that they were expecting. They are not having the sales that they expect or the production that they expect. So this is telling you, okay, we are close to burst. How do we know that they actually burst? Which indicator should be? I think the first that you need to look at is the unemployment rate, and then you will see the GDP. Yes, that these are the two key elements that you need to pay attention to. Yep. Okay, so how long could last this crash? So here you have in this graphic, you can see it quite okay. Let's go to make it bigger. Okay, this is showing the correction of a very long-term cycle started after the crisis of the 29. Okay, so this is aligned with the graphic that we showed here. Okay, this long-term cycle, I will mark it here. This long-term cycle. Okay, starting in approximately 1930 until now. Okay, if we are really correcting this very long-term cycle, that we see the internal structure, we will see a total of 7 waves. Okay, we go back here. The very cycle should finish in the blue area and between the two lines. So what about the bond liquidity? Yeah, but the current crisis will not happen. Okay, so sorry, I have quite a lot of questions. What are the final comes? Can expect? Okay, no. Okay, I have this. Will the stimulus bill plus Fed injection trillion in markets lowering interest rate, buying bonds, etc. Will that prevent a crash? They will try to do that. Of course, they will continue doing the same. They will continue applying the same. I don't know if this will be enough at this moment. Yeah, I'm not 100% sure what could happen because already we have a lower interest rate last month and the market just dropped. We're talking about tax relief, markets drops. Now we're talking about more money, more stimulus. I don't know really if the investors really believe now in the value of the money that we have in the market. And that's quite important, interesting to see how the investor will react, how they will believe about the value that the central bank are saying that this money have. Okay, So this it's the first time we are in this kind of scenario. But if the investors start putting in doubt the value of the money, then we are in an issue, and we'll start just looking for different kind of alternatives to storage value, not only in the money indeed. Bond liquidity will happen. Okay, so what happened? So time. Reynolds is asking about time. So the time based on how the fractal behaves will finish here. Okay, between June 21, okay, 2021 up to August 2024. Keep in mind that we are talking about this very long-term cycle. Okay, depending on how deep the correction, the longer it will be. If we are talking about a correction around 1400, 1500, yes, we're talking about mid-year 2021. If we're talking about a very deep correction, then we can expect this around 2022, 2023. Yes, around the 10,000. Yeah, all depends what is the mood at that moment in the market. Yeah, and how big and how this debt bubble is hurting all the economies. Yeah, the corona crisis will be limited, of course, but then you have all the consequences, yes, of this crisis, and that is linked to the debt bubble. Yeah, that's why we can expect around 2021, 2023, the end of this bearish market. Once lower grade bonds become significantly less liquid, yeah, of course. At the moment you start losing liquidity, you will start facing issues, yeah, and that will help to this bubble to burst. Yeah, this is a good one, Edger. Good observation. Will it be as big as the housing bubble? I think this will be even as worst. Okay, so we can compare this with different kind of analysis we did, and you can find this in the blog. Okay, this is in Spanish, but you can use a Google Translator to have a brief in English of what is happening. So let me see if I can just see the graphic here. Okay, here is a spectrum. The spectrum is how the instrument is moving. Yes, how it's shaking with the time. And if you see these 2 points, I know it's not very clear. So this is the crisis of 2008, and this is what is happening now. Okay, the range of movement is as the same as in 2008, but the time that we are into this panic, this crazy movement, is longer. Okay, so we can compare this with 2008. And the same we see here. Let me go a little up. With the speed, how the movements are changed and moving faster, slower. So here you see in this graphic the speed, how the speed became negative in 2008, and what is the range of that speed, and how we are now. Yes, we are exactly as the same, within the same range, but even the time is bigger. So we're talking about a panic in investors. Okay, and the same we see here. How the dispersion of these different kind of movements behave in 2008, that is this part here, and they are behaving now. Similar behavior, but it's lasting more. Okay, so this telling you, is reflecting that the panic is really there. Investors are really afraid of what could happen. Okay. Wonderful boss wants lower bonds. Yes, we already saw that. Will this big housing bubble? Yes, probably even bigger. I hope not, but everything is indicating that. Is there a possibility for the US to recover from this? If so, how? Yeah, with time. In the end, of course, if we think about world economy, always we are growing. So that's why when we go to this graphic, I cannot zoom out in this, but I can come back here to this. So if we see this, sorry for this, and you see the trend of the Dow Jones since the last crisis, we see that we are always growing. It's an uptrend, and that is what always happens. So we will recover from this, but now we will have a really a big pain coming from this crisis, of course, and later we will recover. Yes, and we will continue growing. Society always grows. Yeah, and that is important concept to know. Bearish market won't last forever. We grow more than we drop. Okay. Okay, it's better to buy growth versus value stocks. Okay, so I will try to don't go to stocks at this moment. Okay, I won't go to that. Try to, if you are familiar with options, try to go to options. If not, CFDs. Okay. Can you please read questions out loud? Yes. Yeah, so, sorry if you cannot hear me. Okay, thank you for the call out. I don't see them and sometimes. Yeah. Okay. Okay, Patrick, I will do that. It will affect only manufacturing. It will affect only manufacturing or other sectors like service. In the end, this will affect everything. Especially now, you are seeing everything that is a hotel, tourism, service. It's just drop. It's just shut down at this moment. Yes, so will affect in the end everything. That was a Parag. You mean that is a bigger growth after every correction? Yes, of course, we will always be growing. You can see this in this graphic, and you will see all the time with the society, human always grows. So that's the good point of this. Yeah, we need to correct to continue growing. Okay, it's a good time to buy stocks like Apple or for the downside is possible. So this is the beginning probably of a bearish market, a long term. Yes, if we are correcting this big cycle, and it will last, we saw before, to 2021, 2023. So the best is just wait. Yeah, try to go to other kind of instruments. Don't buy. Try to go to CFD. Yeah, something that allows you to go in a bearish market. Yeah, does a recession affect the IT industry? Will affect everything because people, consumers, will stop to consume. Yes, that's the point of the recession. Yeah, probably this will affect IT too. Do you expect the drop still this week? Yeah, when we talk about long term, Patrick, we talk about 2021, 2023. Yes, we can just check what's happening in the short term waves. Yeah, daily, weekly, and even intraday in S&P, and you can extrapolate that to other indices. Yeah, we can do that now. 2 years of debt. What is the debt bubble? What is wrong with it? Okay, so the biggest debt is with China. So China owns the biggest part of the American debt. Okay, sound like quite curious, but yeah, it is China at this moment. We saw a big fall in prices as the coronavirus period in the last weeks. The effect of the economic consequences and the debt bubble burst will continue the bearish market, but do you think it will be slower or less aggressive than the one we have just seen in the last year? Of course, I don't think this speed, this strength will continue. Yeah, this is too fast, and I will explain why this is too fast. Okay, if we go, okay, we go to the monthly. So ideally, there is always a connection between what is a motor wave and a corrective wave. Yeah, that's why we can call this a fractal. This connection is not only on length. You heard about the Fibonacci retracement. That is a connection in length, but the connection is also in time and it's also in speed. This connection allow us to identify an incomplete sequence within the fractal. So that means that we have the basic fractal, the basic structure is always 3 waves, 1, 2, 3. And we can iterate this in different ways in length, time, and speed to create different patterns. Yes, as simple as that. So in this case, we have one upside wave, and we are building a potential corrective wave. Yes, so ideally, because most of the patterns build and follow this relationship in time, the corrective wave should finish in this area. Ideally, most of the time, not always, but most of the time. This increases the chance to us to know that the very cycle is finished, or it is not a very cycle. The very cycle is not corrected, and is motor. In this case, will bring new lows. But in this case, the sequences are so big in time that we're talking about a corrective. And this movement, this first leg in that fractal, happened too fast. Yes, it's too much panic here. It was the first explosion. This clarified everything at one point and say, okay, we are now entering in a phase that will be difficult for us. Okay, we are facing a potential recession. We are correcting the market. Something is not okay. This is too fast. What needs to happen now? We need to balance the time, because we broke the movements, broke the relationship in time and speed with the prior wave. Okay, so now we need to get time to get into this area. Okay, I have too many lines, so I will delete that. So probably the market will stay sideways for some time, or maybe we can have a new low and then the market will stay sideways for some time in order to balance the time. Yes, to get again that connection with the prior wave. And then we will have the last leg. So could happen something like this. If this is a low, then we can have an horizontal structure, and then we have again another wave down, and we bottom at this point. If we see a low happening at this point and we see a reaction up, so we have a high chance, a high probability that this minimum is the end of the bearish market. Yes, is this clear? I hope yes. You have access to all these graphics for free in the website. Yes, so you have one part in the website is called free forecast. So all the graphics that we are seeing now, yes, in free forecast, is a package of 20 graphics. Here, free. You just log in and you have access to all the graphics that we are seeing now. So of course now we need to restore that balance, restore the equilibrium that should exist between the waves. So I think now we just bottom and we need some time to digest what is happening, and that will bring a sideways market to then have the last the next low in the sequence. Okay, please let me know if the idea was not clear. And this is a monthly time frame. If we move to the weekly time frame, okay, the movements are so fast that the correction, if we have a fast drop in this case, like this one, I will go to the daily, okay, like this one, you have two high probable scenarios. The first one, the correction will have a similar speed and behavior than the drop. That's the first one. That is what is happening now. If you see, and this is very nice, how the movements are aligning with the ideal distribution for speed, are aligning with the time, and probably we will make a high. Yes, a new high around this area, between the orange line and the blue box. That is what we call a tractor, okay? If we have a maximum here, what is next? we need to see a reaction downward. If this is happening, then the chances to continue seeing movement to the downside increase. Okay, and we will have a barrier that at this moment is this level that will trigger even more probabilities for a bearish scenario and new lows. Okay, because now at this moment when we have this, we are like in a non-trend zone, so we can still have reactions upward, downward, yes, but not new lows. That's why it talks about the investor sentiment. Yeah, so that's what we see there. When it breaks this level, all the investors are highly convinced of new lows, and then when we have the drop. Yeah, that's how the market used to behave. Yes, so now this strong reaction upward fast is connected with the prior one, with the drop. Now they are connected. Everything is matching. We need to wait a maximum around this area and then see the first reaction downward to talk about this is a motor wave, this is corrective wave, and then we need to see another motor wave to the downside. Okay, where to the next attractor? In this case we have two. Yes, so the price will move to this area, this, and depending on the strength here. Yeah, so this is the S&P long term. Another tool that you have now in the website with this package of free graphics is the dashboard. So if you have doubts if I need a trend, the dashboard will help you a lot with this, because analyze different part of this fractal and tells you, okay, the trend is bearish, is bullish, is sideways, because remember, always you will have three kind of trends. So when I am opening that, go to instrument, will affect this kind of, okay, it will affect everything. Yes, why is good showing so much volatility and confusion? Should it not be increasing amid all the panic? Because there is a lot of panic, and the panic was before all this big crisis. Yeah, this is the question from UD. It was before. That's why in the analysis we did about the fractal pattern, we saw this behavior before. Okay. What do you feel? Why do you feel the bearish cycle this time will be so long and deep? Because we are probably correcting this long-term cycle. And as I said before, all the waves are connected in length, time, and speed. This model is fit on historical data as every model, but financial processes are not stationary. Why are these historical patterns going to hold in the future? Because it's a very nice question. In the end, it's a fractal. Yes, always behaves at the same. And you will have different points. Okay, it won't be exactly the same figure that you will see, the same behavior. We're talking about psychology mainly. Yes, how we react based on our emotions, how we connect with other people based on our emotions. Okay, so that's why you will expect a similar behavior, not 100% the same, because if not, this would be super easy, but yes, something very similar, or at least attached in these behaviors. So I will show you the dashboard so you have it. For example, if we go to indices, we go to weekly, the S&P, and we want to see the trend at this moment based on persistence, different kind of basic statistics, correlation. The spectrum is how the instrument moves. Yes, how are these waves behaving, and the speed. The overall trend is bearish. Okay, and the recommendation is, if you need to invest on sells and not on buys. Yeah, and you will have this for every time frame and for every instrument that we have in the free package. Yeah, so you can access very easy. It's very easy to read, and if you have any question, because we don't have enough time now to explain and to go further this, just drop me an email. Yes, and I will answer your question. Okay. More questions. Sorry, I will move to this. So price of options must stabilize at all prior levels as the market balance again. Yeah, if you see, and you can see this in the spectrums, especially. So let's go, for example, the spectrum of something different. Let's go to euro. If you see, the spectrum shows the dispersion, how the movements are bullish and bearish in this case, and always you see a symmetry in the movement, and that is crazy. You will see this in all the instruments. Yes, all the instruments follow the same principle. Yeah, of course, there is always a balance. Yeah, and you will see this balance here, always in the spectrum. Yeah, for the euro, let's go to the pound. Yes, we see how similar are. We can go to even the Bitcoin, that is something totally different. Yes, it's very nice to see how this symmetry works in all the instruments. It is a fractal, but also based on something constant, human nature. Exactly, that is what saying Martin. That's true. Would it be better to invest in Chinese market during this time? I've been checking what's happening with the Hang Seng, and the Hang Seng is dropping as the same as the US. What we need to see really if the economy of China is stronger as the American to start seeing some improvements earlier than the US. That's something we can check, of course, and it's a very good point, James. Okay, and we have special SP options. So thank you. Where do you see crude oil prices going in this market? So I will answer that question. I will show Bumblebee quickly. So crude oil, we have it here, and this is an old forecast. So if you see, what we were expecting is a crude oil around this level. So we are in that bottom around 14.93 and 27.61. Okay, and in the weekly time frame, we are moving to the next level. That is around 15.25. Yeah, this is too low. 3.41, but we can reach the upper part of this attractor that is matching or is overlapping with the monthly one too. That is the last part of this monthly, and then we can see a bottom in the crude oil. Okay, perfect. It's very nice and very intense webinar. Thank you. I really like it. So we were talking about S&P. So the last part of the webinar, I want to show you what happened with the Bumblebee. Our artificial intelligence that is investing, all is automated. So what this is the current scenario with investment product. Everything is dropping around 20% since mid-Fed. Everything that is investment funds, different kind of. These are the top 4 or 5 in the Morningstar. Yeah, of course, we can have a look. Patrick, the best for the DAX is if you can just send me an email to info@thefinancialforecast.com with that question. I will send you the graphic for the DAX. Okay, there's no problem because I have the graphics, but we are running out of time now. I want to show this. Yeah, of course, you can have the PowerPoint. Just send me an email at info@thefinancialforecast.com. Yes, just tell me that you were here in the webinar and you want to have this PowerPoint, and tomorrow you will have the video in our blog. Okay, so remember that. So what did Bumblebee this month in March? 30.7% growth. Yes, Bumblebee just analyze the fractal behavior of each instrument. Now we have developed the algorithm for 5 different currency pairs. It's working with currency pairs. Okay, and Bumblebee grew 30% in March during this month. So it's really amazing because all the back tests we did with this tool were not expecting this kind of scenario so heavy and so strong like Corona crisis, and the algorithm behaves perfectly well. So we are very happy. Our clients are very happy with it. The performance is 82.3% of all the transactions are accurate and with the profit, but most of them, yes, so that the system is marking out, the stats are marking as negative, are when the operation with the transaction is closed. That difference of spread. That's why we see a loose trade only of €2, 272, and profit 813. Okay, we have this is the largest, the lowest. So if we go to consecutive win, 4 consecutive wins, 1 consecutive lose, and the total profit, this is for a client account of €5,000, and then long position 100%, short position, blah, blah, blah. What is the total? We have here the gross profit 1,500 and the gross loss 7 euros. It's performing really well since the beginning of the year when we launched it. In February, it was quite a weird month, 7.6%. And how it works, you can get the summary of this. You have all the transactions here to see that this is true. Yes, we're not scamming anyone. And this is the way that Bumblebee works, and these are some graphics based on the instrument we are working with at this moment. Okay, backtest and live. Okay, that's all for today. It was I have the feeling it was too short. Thanks a lot for being there. Before you end the webinar, could you tell me? Yes, sure. The email is here. I will put it bigger. For all of you, just you want the PPT, you want to know more about Bumblebee, you want to see the recording and you don't know where to find it, you have a specific question, you want to know, for example, DAX, whatever, just drop an email to info@thefinancialforecast.com at my name, just to Matias, and I will answer all the emails. Yeah. Okay, thank you so much for this hour. Very nice to share this hour with you. Wish you all the best and see you in the next webinar. At the end of the webinar, you have a survey. If you can fill it, that's really good because it's a way I can have a feedback from you and I can improve for the next webinars. Okay? Thank you. Have a nice day. Bye.